Mr. Thiam, Credit Suisse reported a profit of 170 million francs in the second quarter, and the revenues rose compared to the first 3 months. What were the key factors for this improvement?
Okay. Mr. Runo, good morning. As you know, we are involved in a very deep restructuring of a bank. We're doing that against a very difficult environment for all banks, as I'm sure you've seen. So the key drivers really are, we said we would achieve a profitable growth. We have been able to collect 11.3 billion of new assets in the second quarter in the private bank, which is a really excellent performance. We said we'd control cost, and that's really key, reducing the absolute cost. We reduced cost by 8% year on year. For a company of the scale of Credit Suisse, that's 400 million lower, and that's a lot. We said we'd reduce risk, it's very important. We've reduced the risk by 50% in 6 months, and we said we would strengthen the capital position. We've gone from 11.4 to 11.8 in 3 months. That's also a very positive evolution.
Especially the accelerated restructuring in global markets had an impact. What are the next steps in your plan?
Well, the key thing was to right-size global markets, as we said. We measure the size of global markets by the number of RWA assets. We said that we would limit it at 60 billion by the end of this year. We are at 52 billion by the end of June. So we have achieved the objective, better than the objective 6 months early. So now that it is right-sized, we're going to simply leave it at about this size and focus on serving our clients, which is really why we exist, serving our clients, providing services to our clients. We have now a very efficient, very clear platform, and we can drive forward with that.
International wealth management is one of the main pillars of your plan. How did Asia develop?
Very well. We have 5 billion of net new assets in the quarter. We've increased every quarter since Q4. Q1 was above Q4 and Q2 is above Q1. The gross margins are up year on year. That means these are quality assets coming in. And we've been recruiting because there is a unique opportunity in Asia. A lot of people have been retrenching. We actually believe in the long-term future in Asia, and we are recruiting. So we are getting a lot of very good resources, which will, over 2-3 years, develop our future very positively.
The Swiss Universal Bank generated a more or less stable profit. Are you on target for the planned part IPO?
I'm really pleased that you asked me about the Swiss Universal Bank, because I wanted to talk about it. It's a crown jewel. It's a fantastic bank. It's one of our best assets. Actually, profits are up. Return on capital is up. All the plans for the IPO are on track. We will register the legal entity Switzerland by the end of this year, we hope. And the reason why we want to IPO, I really have to explain this to the public, is because it's such a good asset, which may sound like a paradox, but we believe that the market doesn't really understand the value of a Swiss bank, that it has a huge potential. We've been able to increase the profitability again, and that this will be a very highly valued stock, which then will benefit to the Credit Suisse shareholders.
The CS stock dropped under 10 francs in early July. Do you take it as a sign of a waning support by investors?
No, the share price, first of all, is largely a reflection of the environment. There is a lot of focus on our share price because I'm new, but it's a fair observer would recognize that the share price of all the banks have very much suffered. The only thing we control, the only way we can deal with this is by working hard and delivering and doing what we said. We said that we would grow profitably, we're doing that. We said we would reduce costs, we're doing that. We said we would reduce risk, we're doing that. We said we'd strengthen the capital, we're doing that. And as we do that quarter after quarter, I am absolutely confident that the share price will rise. So I see it as an investment opportunity, and it's not going to last because the share price will rise as we deliver.